or because they simply won't have any more money and they won't be buying things. The other interesting thing about the stock market is that it not only creates the value for commodities, just as we looked, gold and oil, but it also creates value for companies. So if a company proceeds with a public offering, it loses its anonymity to the world, and everybody can follow it, and then it becomes a truly public company where its value is created by the stock market itself. The stock market price of a company is very important because it shows to the public how much worth it is. However, that not necessarily means it's true, because we already know that there's a lot of deception and lies out there in the world, and as you may realize, companies may lie numbers on their statements and understate or overstate things, and eventually we'll notice that after, for example, accounting fraud case, company stock moves down sharply. So the way it works is that the companies produce a set of paperwork that describes companies' activities, potential profits, and based on that, the market comes up with the price for that specific company, and the pattern is as follows. If the company consistently makes more money, consistently is much more valuable, then the stock moves up. If the company is losing it, if a company is caught with an accounting fraud where they were losing money but stating that they were making money, then the stock moves south, which is pretty much it's losing its value. These kind of things are very important because it gives an indication for people who, for example, want to buy businesses and offer prices to other businesses. And once again, for example, just as with the commodities, we can look at, for example, Apple, and if Apple wants to sell everything that it's own, its company's technology, to Microsoft, for example, which is another very similar company producing computers and software, they would first of all look at its current public price, Apple public price right here, and based on that they would get an indication of how much money Microsoft should offer them or pay for them to sell Apple to Microsoft. And that's similar to the commodities. Everybody has to follow the price in the stock market, and just as with the stocks, companies may not be bound by law, but they're bound by sense to follow the stock market price. Obviously, it wouldn't be surprising that Apple would sell its company to Microsoft based on a $200 for one stock price, considering that Apple had a lot more potential to grow anyway, and everybody wants a bigger paycheck. However, they may not necessarily agree with an offer from Microsoft to sell its company for a $100 per share. So that's the thing. Then there's money. Probably the most important aspect of the stock market is the currency itself, which is used every day by nearly every person around the world. And just as with the commodities, the price or the value of money is shown right here at the stock exchange at the stock market, and everybody in the world must follow this. The prices, food prices, utility prices, everything out there is determined, calculated, priced based on the price shown right here on the exchange. Now, they may want you to believe that you, as a somebody who invests in the stock market, determine this price, because that's how the math works. You buy, the stock goes up. You sell, the stock goes down. However, believing that billions and billions of people in the world slowly rely on a couple of million traders with a lot of money in their hands would be outrageous, right? This is a democracy. This is where the power isn't in the hands of a few elite who can collude and increase euro price or increase dollar price or make their companies much more valuable. I don't believe that it is like that. I think that there's some kind of a unknown or a secret combination of kind of collusions of people, countries that are running the world, and or let's say they're not in control of the world itself, but they are running the world, for example, by determining the price of euro versus dollar. So they don't necessarily own euro, but based on whatever's out there, they determine the price. However, it's like a video game for me, because it makes me feel that I'm being controlled, just like everybody else in the world, by a force that's unfamiliar to me. And it's so unreal that it's due to the fact that it would be unbelievable. Probably nobody would actually agree with me right here that somebody is in control of the stock market besides a few traders. And I'm talking a few because that's only like a couple of 100 million people that or institutions combined that can have the kind of power to influence the stock, because there's many billions of dollars in that stock. So if you wish to gather all those billions of dollars and change the stock price, that would require many institutions and individuals doing the same thing at the same time. So that's the thing. I don't think that there is some kind of a closed world order that's consisting slowly of already known entities that trade against each other and play a game, and the conclusion of their game is what we currently have right here, which is Euro USD price. I think that it's all scripted, it's all already determined all these numbers right here that concern volatility are absolutely fake. I'm sure that that's real money, but I wouldn't be surprised that that money that's being used into investing in these is simply fake money. So what I mean is by saying that somebody simply created the money out of nothing, created some kind of entities, companies and individuals, and with these fake entities, companies and individuals, they invest and they move the stock market, and everybody out there in the world itself believe that is the truth. However, it may be a truth for as long as everybody has to follow this. Everybody in the world must exchange their euros for $1.19. However, it not necessarily means that this wasn't done by some kind of a force. Now, what exactly is this force? I don't know. I don't think that it's a specific country, because then we would probably see a much more one-way movement. We mostly see that the entire world is either moving upwards and downwards. So if the recession hits, more or less everybody lost. And that's kind of suspicious too, because everybody shouldn't be losing it. So I don't know what it is, but it's certainly some kind of a regime type of a thing. So it could certainly be a thing close to some sort of a I would say an organization that runs the world, and that's it. So they basically are consisting of everybody out there. So that organization out there that actually controls the stock market is consisting of people from all kinds of countries, and they just secretly run this just like that. How otherwise it could have been done? I, for example, believe that after wars, governments got together, derived a plan of how they would live, and the most important factor is that they live in peace. And based on the fact that there must be peace kept in the world so that we would avoid another war, they created an organization that consists of individuals from all kinds of countries, and they together derive a plan of how the world has to work. So for example, Europe Union with the United States of America must be more or less equal, and equal in financial terms, so the money can be too different in terms of value. So €1 shouldn't cost $2 and $1 shouldn't cost €2. So what they planned is, for example, shift the value up and down consistently on a very equal support rejection brackets, and we see that, for example, for a year euro value went up, then for a year euro value went down, then for a year euro value went up, and for a year it went down. After that, for a year euro, or for a couple of years, year and a half, euro value was going up. Then we saw a recession where euro value went down. After that, we saw just what I said, euro USD in a very tight support and resistance bracket, moved up and down for a couple of years until euro gained the momentum, and I wouldn't be surprised that euro will lose this momentum to another support level out here or just below it, and it will keep going until the end of time. And this will avoid any kind of friction between the alliance. The people will stay equally rich in terms of the money value. So if somebody had 100,000 USA and somebody had 100,000 Europe, they will always, or mostly always, in terms of 5-year basis, they have certainly been equally rich, because when Europeans were richer the first year, the second year they were poorer, and it kind of consistently moved. And this is the kind of a regime I'm talking about, where they actually made it all up so that they could live in peace. Because if, for example, dollar becomes too valuable, the Europeans become upset, and they then kind of throw USA out of NATO, attack USA, destroy USA, nuke them, and they then become the rulers of the Western world, and the money is more valuable, everybody's richer, everybody's more happier, in order to avoid the Third World War, or to keep an alliance together so that everybody would just keep staying rich as they currently are and equal. They derive this plan where they are equally balanced. Now let's see how's my 1 minute going on Bitcoin. It looks like I need to change my position here and buy. Oh no, as you can see, okay, it's fine. For 1 second there I thought I accidentally closed my Coinbase position, but it looks like it's fine. You see, unfortunately right here I have looked at Coinbase but bought Bitstamp. However, they're not exactly the same, but they move on the same pattern, so I should certainly buy. That means that the money inflows and outflows on both of these exchanges is very similar, so that in itself is suspicious. For example, why 1 million people on Bitstamp exchange every minute out there buy and sell with almost exactly the same decisions as a 1 million people on Coinbase. That is in itself bad. What, do they all go on Google and just read all the news out there, all the 1 minute news, and they kind of come up with their ideas? I don't think so. I think that it's nearly automatic, created but some kind of a world order out there that nobody would ever tell on TV about, because that's secret. That's what keeps things going. And that's why two different exchanges have nearly identical movement of the same security price. Let's look at the headlines out here. Headlines for Bitcoin USD. Cryptocurrency market takes a tumble as Ripple bubble fear looms. Obviously, as we already know, the Bitcoin has been so extremely volatile that bubble isn't even the right example here. You see, normally a bubble is where a stock moves up heavily and then it kind of goes down into recession level, like at least -30. Normally it's like -50, and it kind of stays like that after. It never really moves up. And we can then call it was a bubble. And a bubble, it's a sort of a thing where you know that a stock that shouldn't be as valuable, or it will never be as valuable as it currently is, will certainly explode. So that's the thing of a bubble, that you see, the bubble, it not inflates, it explodes. So is Bitcoin a bubble? Obviously not, because it exploded already consistently every time. Look at that, it exploded right here. That's a bubble right here. That's like the perfect bubble example. An asset that nobody knew about anything. An imaginary money based on a blockchain that can hardly be cracked or cannot be cracked whatsoever. Moves up in value from $4 on Bitstamp to 1,163, and then the bubble explodes. It moves down to less than 200, and it kind of stays like that. And that's the perfect example of an asset that moved that too much. It became a bubble, it exploded, and then it went on to its true value or disintegrated whatsoever. However, here we see that surprisingly, we realize that it's not a bubble. You see, that was another explosion right here, but this explosion didn't kill it. It was a kind of a correction, right? That's what they would certainly call it, a correction. Now it's moving upwards once again, and we see this kind of correction going all the time, but it's moving so ferociously as if nothing else out there did it. And then something that wasn't worth almost nothing a couple of years ago, it's currently at 18,953. And then we see another correction right here. It goes from a top of 19,666 on Bitstamp exchange to less than 50% or nearly 50% loss here to 11,159, and that's like a bubble right here. It explodes, but in reality that's not a bubble. You see, it kind of suddenly gains value again, and that's a proof that it's not a bubble, because the bubble, it bursts and it's no more, and it's just a sort of a really kind of a heavy correction, right? Too much money was poured in, then they kind of took the profit, and then more money was poured in once everybody realized that it was cheap. So it's not a bubble. If it would have been a bubble, it would have been somewhere out here again, like maybe $1,000, and it would have stayed there. That was a bubble. But look at that, it's rising. It goes from 11,000 to over 17,000. So, and that's just in a matter of less than a month. So certainly it's not a bubble. It's just the way Bitcoin trades. It's just that, simply terms, a lot of money is being poured in, incredible amount of money is being taken out, then once again incredible amount of money is being poured into Bitcoin, and it's kind of moving like that. And I bet that when it moves even more or consolidates, we won't see it as a bubble itself. It's just going to be in the range right here. That's Ethereum. On short term, Ethereum is very similar, as you already know, with Bitcoin. However, on longer term, we don't see that much similarity. But it's still quite sharp on the dates that are important for Bitcoin too, but not that much. I see, for example, that's 2017 December 19, and then I'm looking for some kind of correlation here, and I see that on the same date it was going down too. Ethereum was moving down too on the same date, and we see a kind of similar pattern here. It's time for me to close this position on my 1 minute chart. And I expect Bitcoin price to start rising in no time.